So in about 2 weeks, we're going to get the Federal Reserve coming out with their interest rate decision and also their projections of interest rates in the future. Now, last meeting that we had, we didn't get the projections, but in this meeting, June 12th, we are going to get that. And it's going to be very interesting to see and hear whether we're still getting 3 rate cuts or not, because that hasn't changed in the Fed's projections. What has changed is we're seeing more and more of the Fed members come out lately talk about that they may have to continue to hold on to rates longer than anticipated. Continue to talk about that inflation is reaching to the target, but not there yet. Talking about that, cutting rates too aggressively too soon may not be the option, although they may do it later on, but they need significant data. And that's what Kashkari said today, coming out, discussing, saying, this article here coming out from CNBC, saying that he wants to see many more months of positive inflation data before a rate cut. Now, Kashkari is not a voter, although he does have a voice and he does have inputs when it comes to monetary policy, but he doesn't have a vote when it comes to interest rate decisions. He does have a vote in 2026 when he gets that power. But until then, it's very interesting to monitor these Fed members, what they have to say, what their views are, and at times they may even leak what the board thinks as well. So with the current market, especially the bond market, selling off aggressively today, not just only because of the horrible bond auction that happened today, the weakness of demand, but also fears that maybe as we approach certain data points, like for example, this week we have core PCE, another inflation indicator, one of the Fed's favorite indicator. What if that this Thursday doesn't come in lower than expected? Do we start to price out rate cuts completely for the year? Or does it come in weak and we start to price in 2 rate cuts? Because right now the markets are thinking that we will get 1 rate cut and that will be in December sometime. Now let's hear what Kashkari said today. A couple of things. First things first, like I mentioned, he believes to see many more months of positive inflation data. And he says in order to get the confidence, in order to cut rates. He also said, I don't think we should rule out anything at this point, which is hinting towards that the bank could even possibly hike rates if inflation fails to come down lower. Now today, oil prices moved up, sitting around $80 a barrel. If for some reason we see an aggressive move up in oil prices, that could be that scenario where inflation fails to come down. But right now, that's not what the market's expecting. That's what also some of the Fed members are not expecting. They expect that they are going to hit the 2% target. Moving on, Kashkari also mentioned, I'm not seeing the need to hurry and do rate cuts. I think we should take our time and get it right. He also said that it's not appropriate to move the goalpost at this stage, meaning that we're not going to change our target of the inflation target. 2% is 2%. We're not going to change it to 3 or 4% just because we want to win. And basically saying that the Fed may need to hold interest rates steady for an extended period, possibly all year, in order to reach its target. So it's going to be very important in June to realize and see, are they leaning towards, well, first of all, are they going to bring down those 3 rate cuts that they expect this year to maybe 2 or maybe 1? What about next year as well? Any changes there in terms of rate cuts? Do they bring it down to 1? Do they bring it to 0 rate cuts this year? That's definitely a possibility if the economy seems to do well or fine, nothing's breaking, inflation is not coming down, then they could hold for quite significant amount of time. But time will tell, and we'll have to be very, very data dependent in order to figure that out. Another key point that was not mentioned in this article, but Kashkari did say, is that he says that he's worried about the commercial real estate market and says that he could see significant losses in that area. And if that's one of the triggers to create a black swan event that causes the markets to completely panic, the economy to completely go upside down, and for the job losses to skyrocket, unemployment rate to skyrocket, then there's your event, the catalyst for that crash in the equity markets and for also inflation to come down lower. So I'll link this article in the description so you could read up more about it. Let me know what you guys think. Are we going to get one rate cut this year, 0 rate cuts, or are we going to see rate hikes? Let me know what you guys think. Hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.